Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
This is the Blockchain Show, episode 158. Thank you for joining us today. My name is Ethan Kinderconnect. It's my pleasure to welcome our guest, Hugo Renaudin, CEO and co-founder of LGO. Hugo, welcome to the show.
Thank you very much. Thanks for having me.
You're very welcome. The pleasure's all mine. Just to kick it off, maybe give us a little bit of a background about yourself and how you got involved with the blockchain space.
Yeah, absolutely. So I wouldn't say I'm one of the earliest members of the community. I started working on blockchain projects around 2014, 2015, when I was still a student. So I was the first time I heard the word blockchain was in a computer science class in France, where I was doing a master's. And, I was interested about that. So I started looking at it, started trading a little bit, but not so much. And then I arrived in the States and I started working for a cryptocurrency hedge fund just before the bubble in the beginning of 2017. And at the time we were one of the biggest hedge funds at the time. We had $100 million in AUM, doing arbitrage strategies in different exchanges. And that's really when I started, getting deeper into this community, into this industry. And obviously, at the time, it was the Wild West. I mean, it was pre ICO bubble time. You didn't have that many people in the industry, and it was very people didn't know what Bitcoin was. When I was talking about that with my friends, they didn't know at all what it was, and those that knew immediately talked about money laundering and dark web and things like that. So that was when I really started, looking at that. Fast forward 1 year, the bubble has burst, and I launched a new project with my business partner Frédéric Montagnon, who's a French entrepreneur as well. And this project is LGO, so that's the company that I'm heading today, and that's kind of started how it all started.
Very good. Yeah. I think that, the great thing about blockchain cryptocurrencies is it's global pretty much from the inception. And right now we're kind of looking at life through this, coronavirus lens of travel bans and shutdowns and everybody's locked in. But I don't know if you mentioned this, but I've heard the LGOs, it's the biggest institutional exchange in Europe. You've got clients across 15 countries. I'm curious, maybe we can just jump into this a little bit right away. How are the markets affected by this kind of global, I guess you could call it a pandemic, but how are things looking? Since you're in a good position to give us an overview here.
Yeah, I think it's tough to really, I think the future will tell us really what the impacts are of this global pandemic. But from what I see and from what I gather, my opinion on this market. So first, I think that the cryptocurrency industry as a whole is actually pretty much it's pretty much safeguarded by this global pandemic because people are used to working remotely. So for instance, we have more than 50 clients in 15 different jurisdictions. So we're already, as a business, we're already set up to deal with clients on a remote basis. So we use software like Zoom, we used to have the difference in time zone and working remotely. So, and I think that's the same thing for every crypto company. I mean, you look at Consensus, for instance, or Xapo, those are organizations that didn't have they do have a headquarters, but most of their companies work completely remotely. And so I think that's the good thing about, just from a pure corporate standpoint, companies are pretty much equipped to deal with the quarantine and the consequences of the pandemic. Now, if you look at things, I'd say a bit more in depth. What this pandemic creates. I think it creates two things. The first one is obviously, it's a 3.0 digitalization of all the services, right? So you cannot go to the bank anymore because you're stuck at home, right? So you can use your online banking services, or you can go a bit deeper and use other technologies. And I think it's a good opportunity for in the long term for technologies like blockchain and for cryptocurrency as a whole, to be like this kind of digital representation of value, and actually have a use case in a world where people don't meet anymore to exchange cash or to get their funds out of the bank. So I think that's a good opportunity as well for crypto. And it's a good way to fast forward in the adoption of those technologies. I mean, when you look at what a cryptocurrency is, it's a currency that you can exchange without trust. And the thing is that, and I might sound a bit pessimistic, but I think that people will lack a bit of trust for the next months to come. So having this kind of not safe haven, but this kind of medium of exchange, which doesn't rely on a trusted party, it's something which is quite good. But I'm not very optimistic about the economic times ahead in general. But I do think there's an opportunity for crypto and blockchain to actually benefit from this crisis.
Yeah, that's pretty accurate. I think a lot of people nowadays, especially around me, maybe have their trust in the systems in place maybe is faltering a little bit. I mean, it's pretty obvious when you go to the store and you can't get any toilet paper. You can't even go on Amazon and get the stuff you need. And I wonder, I get so many emails now, and my inbox is full of, letters from the CEO of banks and different companies saying, we're going to be here to support you as much as we can. And I really like the nature of cryptocurrencies and blockchain that, there is no third party necessarily. There's no intermediary required. So there has to be a certain amount of developers and, legal teams just to make all this work. But do you think that just the nature of cryptocurrencies and blockchain is a little bit more resistant to, human weakness, like pandemics and that sort of things, compared to traditional finances? Just to be a little bit more optimistic about where this is heading.
No, I think, yeah, for sure. What I'm really optimistic, what struck me at first with those technologies and with cryptocurrencies, it's the scalability of the system, and I'm going to explain a bit more that. So it allows you to create financial markets, financial system at a very granular level, at the individual level, and in a scalable way. So you think of the system, the financial system as it is right now. It's a buildup of intermediaries, right? Starting from the central bank, going all the way to your payment provider, like Venmo, for instance, which is your intermediary. And there's a lot of intermediaries along the way, and that's not so scalable in a way. It works, right? But it's not so scalable, and that's why you have a lot of people which are unbanked. What you can do with a blockchain or with a cryptocurrency, a currency that has a blockchain underlying, well, you can build financial markets at scale, and that means that you can provide yield, you can provide transaction services to people that don't have access to banks and that only have a mobile phone, and that's very, very powerful, I think. And so that's one thing that that we're looking at LGO in our own way. We're being more and more active on cross-border payments, and we have clients that use cryptocurrency as a way to transact between different countries. And as you might know, that it's really difficult for some countries to do that. It's expensive, it's slow, it takes time and money, which is essentially what's most important for a business or an individual. So like the opportunity is there for this technology to kind of bring financial markets to the masses, and I think that's a promise of cryptocurrency.
That's wonderful. And while you're talking, I was wondering, you mentioned a few of the obstacles for adoption of crypto, but I'm curious if there are any other kind of main obstacles for like an institutional adoption of crypto that we might see.
Yeah, that's interesting, right? So we're an institutional exchange, and we started with the thesis that the institutional adoption, by big banks, big funds, big asset managers was, a given. And, quite frankly, I don't know. It's still a bet at this point. I think it's still a bet to say that big asset managers will invest in Bitcoin as part of their portfolio. I do hope that they do, because I'm a big believer in the space. But it's if you look at things, in a cold-blooded fashion, it's you cannot tell. There's still a lot of things that today could prevent adoption of Bitcoin as a whole. But let's imagine that an asset manager or a pension fund or a big bank decides to go into crypto, which will, I think, probably happen. Well, there's a whole lot of other things to consider. So once you have the acceptance of your board or whoever decides, at the scale of the institution, you need to actually buy those Bitcoins. And this is something which is extremely tough to do. You have institutional exchanges like ours, but we're oriented towards crypto native institutions. Institutions that know how to hold a wallet, that know what a Bitcoin transaction is, that know how to secure, a private key, and that's actually something which is very tough for large institutions. So what I think my thesis on that is that if there's an institutional adoption, they will likely do so with. Institution will likely adopt Bitcoin with synthetic instruments like futures, like options, like things like that. So those are instruments that they're already kind of used to trade. They're used to deal with. So they have all the pipes in their back office, in their middle office, in their settlement system to trade those instruments. And that obviously has a ripple effect on the actual spot Bitcoin market. But if you look at an institution as being an allocator of funds, it's much easier for them, at least in the short to medium term, to get synthetic instruments. Now, you might say that some would want to have like the actual Bitcoins to make sure that they have, that they hold what they buy, and that's a fair point. But I think that most of the institutional adoption will come through futures and options and things like that.
Yeah, I think it's pretty well said there. I wanted to talk a little bit more about LGO and maybe expand a little bit about how you guys got started and kind of maybe bring us up to speed of where you're at right now and any of the new developments that you may be working on. Yeah,
absolutely. So the starting point of LGO is the technology, and it's a technology that allows you to trade on an exchange without having to trust the exchange. So whether it's from a front running perspective, because at the time there was a lot of exchanges that were front running their clients, so manipulating the prices or printing fake volume data, which is still a problem. So we built this technology, which we call our transparency module, which guarantees that an exchange, a marketplace of Bitcoin, of cryptocurrencies, is actually trustable, and you can prove the transparency of this exchange with lines of code. So that was the very beginning of our project. And this transparency module today, it's live. You can go on http://lgono.de, and you have all the information on our platform. So the number of trades, the number of the volume traded, and all the activity, which is printed in a provably transparent fashion using the blockchain technology. So that was really the starting point of LGO. Now, the idea was that this technology, this transparency, would help the institution get into the space. It's part true and it's part false. It's part true because obviously you need some transparency. Institutions need transparency. It's a prerequisite for them to get into a space because they have a fiduciary duty to their clients. And it's partly false because that's not the only thing, right? You need for an institution to come and trade on your exchange, you need to have extremely good liquidity. You need to have a good operational system in place. And so those are things that we learned along the way. And we've been live for a year, and now I think that's something that we managed to execute quite well. So one of the leading Bitcoin spot exchange. We only have institutional clients, 50 institutional clients across the globe. We have this institutional first approach that allows us to be very pragmatic in terms of how we implement our product and how we cater to our clients' need. And I think that's the key point here, and that's what helped us be successful, is to really listen to what our institutional clients want, and implementing in a way that it makes it easier for them to trade. So that's where we are today. We're operating a spot exchange with those clients. Along the way, we've opened a couple of new services based on our clients' need. One of them is OTC execution. So we have clients that wanted to trade OTC. Well, we allow them to trade with us, and we set up a product with that. We offer financing products as well for our clients. Margin trading is something that we're working on, but we're offering credit lines to some clients that want to trade. So we started with this idea, with this technology, built a prototype and build a community around this prototype very early on, and then after that, with our first clients, we started implementing new features, implementing new things, and refining our product to where it is today. And we're obviously all the time doing new stuff and obviously making things better, but that's the key here, is that we listen to our clients and that they help us be successful.
Yeah, that's a really good approach there. I can see the value in what you guys are working on. You brought up a little bit about liquidity, and we kind of talked about that a little bit on the show, but could you maybe break down the difference between liquidity in terms of cryptocurrency compared to what most other people would associate with traditional liquidity? Any differences?
Yeah. So there's liquidity can mean several things when it depending on the scale. There's economic liquidity, right? You have an asset, and it's how easy it is to sell it. Well, in terms of capital markets, in terms of in the cryptocurrency world, liquidity is actually the difference in price you pay. It's a slippage, essentially. So the way we measure liquidity on our exchange, for instance, let's imagine that you have $1 of Bitcoin to trade. Well, you're going to have a certain price. But if you have $1 million of Bitcoin to trade, you're going to have a different price, right? And it's the difference between those price. The price that you have for a big trade and a large trade is what you call the liquidity. And it's very important because when you're dealing with institutions, they obviously don't want to pay a 10% premium, 10% invisible tax to liquidity. So that's one thing. The second thing is that a lot of people confuse liquidity and volume. You can have a lot of volume, but it doesn't necessarily mean that you have a good liquidity, because you can have very uninformed trader that trade and that just cross what's called the bid-ask spread to get their asset, and that will create a lot of volume, but that doesn't really necessarily create a lot of liquidity. So to us being an institutional exchange, liquidity is very important, because that's the bread and butter of our clients, right? So if you look at, for instance, a hedge fund client, what they're going to have their strategies, right? They're going to have their trading program, which is supposed to create alpha. So that's their revenue, if you want. Now, what are their costs? Their costs, they have execution costs, right? Simply the transaction fee they will pay to the exchange. In our case, those are pretty low. There's 5 basis points for taker traders. And there's the slippage cost, right? So if you trade, if a certain hedge fund trades, 100 Bitcoin in a day, and they have a theoretical return, but they have to pay, a few basis points for every trade on slippage and on liquidity, while their P&L is going to be negative at the end of the day. So it's something that they monitor very, very closely. And the way we solve that, we work with some of the best liquidity providers in the market. So we work with market makers. We have 7 of the 10 biggest market makers on our platform that are mandated to bring this liquidity. And so far it's been very good. It allowed us to show some of the best prices in the market, some of the best slippage for large trades in the market. Comparing to the largest exchanges, and that's something that we've run with third-party data, and it's been a big driver of our growth in the past few months, to have this very performant, consistent liquidity on the BTC USD price, because it's an asset for a client.
Yeah. All right. Thank you for explaining that. That's very, very well said there. Talking about institutions. So why are currency pegged stable coins sort of like like a conduit for institutions?
If you look at what a stablecoin is, it's a digital representation of a dollar, right? So in the case of most of the biggest US stablecoins, regulated stablecoins, USDC and PAX, you can redeem those stablecoins for actual dollars actually quite quick, almost instantaneously. So if you're a business and you have, account receivable in dollars, right? And well, that's working capital for you because it's like it's cash that you cannot use for the purposes of your business. So that has a cost, an opportunity cost. Well, think of a world where every business transaction, every transaction is settled in stablecoin. Well, you don't have to wait. You don't have to wait 1 or 2 business days for the cash of your client to come into your account, right? It takes the speed of a blockchain transaction, which is a couple of seconds, depending on the blockchain you use, obviously. But in the case of an ERC20, it takes us a couple of seconds. So, you can have directly the funds. You completely erase the working capital problems, and that creates a lot of value. The ability to settle instantaneously, 24/7, with clients all around the world. Even for e-commerce business, it's a huge value added. And so that's if you look at crypto versus stable coins, and from a business perspective, a business which is not necessarily into the cryptocurrency world, using a stablecoin actually has a lot of value. Now, the second level effect of that is, if a business gets their system in place to kind of accept stablecoins and to pay with stablecoins and to custody stablecoins, they're one step away from being able to hold cryptocurrency. So that's the way I would say that stablecoins and the mainstream adoption of stablecoins can create a mainstream adoption of cryptocurrencies and Bitcoin in particular. It's because it prepares the whole market to be able to actually hold, store, and exchange assets that live on the blockchain.
Oh, okay. A familiar stablecoin people at home might be familiar with, Facebook's Libra. We heard about that, a while back. I haven't been following it too much. It seems like it kind of flopped a little bit. Is there anything you can comment on that and maybe like what's wrong with that approach?
I don't think there's anything wrong with the approach of Libra. I think they're very mediatized. I mean, the project has a lot of value. When you look at the user base of Facebook, WhatsApp, Instagram, and all so that's on the Facebook side, but on all the companies which are part of the Libra consortium. With Libra, you can create a financial system for billions of people in the planet, and just using their smartphone, they can have access to that. So that's a very, very powerful value that they're offering, and I think that it does make sense. Now the backlash that's been the backlash on this project. First, there's obviously a regulatory aspect because you're creating a financial system which is not necessarily within the bank ecosystem, which can be a problem for regulatory reasons and for let's say the balance of the whole financial system. And there's been, I don't think it's a fair point, but there's been a couple of people that said that there is a data problem, giving your financial data to Facebook and the likes of, and given the recent problems of Facebook with data, that's been a concern of some people. But I don't think that's I think it's two things that are very, very separate. So I think there's a big case for global stablecoins to be exchanged through social networks and through smartphones. So if it's not Libra, it's going to be something else. But I do think that Libra is well positioned to take this place.
Okay, yeah, I see what you're saying. That makes perfect sense. Maybe it was just some of the haters that I was reading about. Now, earlier when you were talking about liquidity, I'm not sure if you brought this point up. Forgive me if you have, but how have you at LGO? How have you guys managed to bring some of the biggest liquidity providers onto your platform?
It's a good question. There's a couple of stuff. The first one, it's a matter of incentive. Liquidity providers, they're a very particular type of actors, and we don't see them as clients. We see them as partners, because obviously, if you have an exchange but you don't have liquidity, well, you cannot have any clients. So we really work hand to hand with them, and we design the right incentives and the right programs for them to come and make markets and provide liquidity. So that's one thing, incentive. Then the second thing is, I guess, is the knowledge of how their business operates. So in my previous company, when I was working, in this cryptocurrency hedge fund, we were acting as the liquidity provider to a lot of exchanges. And so from this experience, I have I knew, and I don't know if I know anymore, but I knew at the time when we started talking to the first liquidity providers, what were their concerns, and their concerns are obviously execution costs, financing costs, opportunity costs, right? So if you put money on an exchange, that means that you cannot put this money on another exchange, and you might as well, lose a couple of good trades if you do that. So there's this whole psychology and this whole understanding of who those liquidity providers are and what they're looking for. And that's helped us a lot, kind of bring the right people in the platform. So that's I guess that's the added value. Then the third point, I think you're a liquidity provider, you have exchanges knocking at your door to that ask you to connect and make markets every day. So you have to have some kind of differentiation. You have to have a method. You have to have an idea that makes it a bit different. And so the whole transparency, the whole institutional grade technology and processes that we're bringing to the table, and the quality of the team as well, that resonates a lot to I think to our liquidity providers and to our clients in general. So that's been a big driver as well for having clients in general come and connect to our platform.
Yeah, that's great. And we've spoken a lot about financial assets, and I like how you are kind of reinventing how the way assets are exchanged, with the help of crypto, distributed ledger technologies.
Yeah, and that's actually a very important point, right? Because there's been a couple of institutional grade exchanges that launched approximately at the same time as us, but we do more volume than them, and we're less funded than them, and we didn't have the same coverage or the same support as them at first. But I think the key here is on how you build your product. And the mistake that a lot of quote unquote institutional platforms make is to think that the cryptocurrency market is just another market. And that's not true. If you look at the profiles of traders, the profile of company that trade, they're all they're institutional in the sense that they manage a lot of money and they're doing it as a business in a professional fashion. But it's not the traditional institution. So you need to have a little bit of both worlds. You need to have some processes, some technology. You need to have some things from the traditional financial world and bring that to the table. But you also need to take into account the particularities of this new world, this new industry, and whether it's the blockchain technology, whether it's the type of client. You can be talking to guys that are setting up a hedge fund in their garage, right? And it's not the kind of things you would see in the traditional equities world. So our strength has been to be what I like to say first principle thinkers. To have the set of knowledge in the blockchain space, the set of knowledge in the traditional financial space, and to mix them both to get the right product. And I think that explains our success so far.
That's awesome. Do you think that part of your success is due to how it's kind of like 100% technology based, automated?
It's I would say it's part of our technology. Of course, we spend a lot of time and money and resources in building an extremely good technology, and a testament of that is so last Thursday was a very volatile day with a lot of orders and a lot of trades, obviously, and our platform stood, and we were like, it could have it was good to go for at least twice the charge. So it's the resilience of our platform, the performance of our platform is today, I think, unparalleled, and so that's a big strength that we have. And I think there's two other things that explain our success. So with the technology, so the first one is the second one. Sorry, is the product approach that we have, which I just touched on. So being first principle and understanding what our clients want. And the third reason is the team. And at the end of the day, you might have a remote business. You might work in an industry where people come from all around the world and interact with Zoom, not Snapchat, Telegram, Slack, and all that. There's still the human part, and I think that our team is very professional and is very good as a whole, and showing this professionalism on a consistent basis after a couple of months, a couple of years, that pays off, and that's been a great strength of LGO to have this team from day one, and that's paying today.
And I'm really glad that we have the internet so we can communicate today. I was reading the Wall Street Journal the other day, and it was just fear. Every article was about how everything is the markets are in downturn, and a lot of people are still tied to that old system, that old way of doing things. So, in closing here, I'm wondering if you can give us any hope looking towards the future, how this technology and how people have different options. Do you think this is kind of like a way out, or are we still going to have to rely on some of these old world technologies for a while longer?
Yeah, I think that first, in the current context, it's important to be very humble, because we're extremely lucky to be in a space which is not too affected by this crisis, and there's a lot of businesses that are going to die because of that, and obviously, we're extremely lucky, and we represent a small portion of the economy. So that's the first thing I would say. Now, on the bright side of things, we live in I live in the United States, and we're pretty well digitized, right? People can work from home, people have access to good technology, but in a lot of countries that's not the case. You still have people, to your point, that you still have people that and businesses that use old technology that just thinking of the act of going to a bank, to a physical bank, to cashing your checks or whatever, that doesn't make sense in 2020 with all the technology that we have. But still, it's the case for a lot of people around the world. And I think that this context, this forced quarantine, is an accelerator of I would say digitization as a whole of the economy. And obviously, cryptocurrency and blockchain have a role to play, because I think that you cannot have a scalable, secure, fully digital financial market without blockchain. It's impossible, because you have too much risk on certain intermediaries, and by adding the blockchain, you add the security and you add the scalability. So it's obviously a huge opportunity for people that are in this space, and it's not only an opportunity, but it's also a chance to kind of add value to the world as a whole. If today the banks are blocked, people will still need to exchange value, will still need to transact, will still need to custody their assets somewhere. And we have the opportunity as a whole, as an industry, kind of get out of just our own small Bitcoin world and to help the whole world, the whole ecosystem, to actually adopt those technologies and live in a more transparent world and a more secure system.
Yeah, I like that. That's very uplifting, and I'm glad that we have that in our future and even in our present. So it's good to know that companies like you exist. So yeah, Hugo, this has been a really good conversation so far. Where can people go to learn more and potentially get involved?
Yeah, absolutely. So you can go on lgo.group. This is our website, and there's everything you need to know there. And you'll have all the information in there.
Great. All right, Hugo. Thank you so much for your time. This has been a real pleasure talking to you.
Thank you very much.
Bye. Thank you so much, everybody, for listening to this episode of The Blockchain Show. My guest today was Hugo Renaudin, CEO and co-founder of LGO, the leading digital asset exchange for institutions. It's the biggest institutional exchange in Europe. Hope you're all staying safe out there and managing to find a bit of enjoyment. If you're one of those like me who has their city effectively shut down, this is a bit of a strange time, but luckily we still have podcasts and ways to communicate over the internet. So be sure to reach out if you would like to connect with us on Facebook. We have a group there. Twitter at blockchain_show. Minds.com. You can find me there on our Blockchain Show channel or the group or at KinderConnect. Or you can send an email to info@theblockchainshow.com. It's been a bit of a challenge keeping up with the requests, but we've been getting some really good guests, so I'd like to keep going with that. Maybe even put out more episodes each month. Definitely reach out through email if there's anything we can improve upon, or if you have any ideas. I'd rather get that feedback through the email instead of getting negative reviews. That way it just gives us a chance to improve rather than scare away any potential listeners. So if you do like what you hear, definitely feel free to leave us a kind review on Apple Podcast or wherever you get this show. It definitely goes a long way in helping other people get the message. The goal here is to demystify crypto and blockchain technology. So this is a human movement and really kind of the next age of the internet. So I appreciate you all taking the time to listen and share this episode. And I look forward to speaking to you all again next week. Goodbye for now.